again, and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Well, today is 4/20 of 2021, and the markets are moving. There's a lot of headlines out there. We're going to talk about the ones that are most impactful, both on the short and long term. You should be paying attention to them. So let's get right to it, and thanks for watching. So we have a super hot housing market. The National Association of Realtors just reported that year over year increase in the median home sales up 17%, well over $350,000 for the average price of a home across the United States. Now, what's more important is what we're seeing is that the demand is so great that there's a $4 million a home need to keep up with present demand. So we're about 4 million homes short on the marketplace, keeping about the average sort of time on the market just under 2 months right now of the current inventory. So most of the homes that are listed for sale, over 2/3 right now, are receiving multiple bids. So this is what's called a seller's market. And ultimately what's happening is a bidding war. And the war really comes down to, on the multiple bid side, contingency removals, right? Sometimes on a normal market, you have bank appraisals and loan appraisals and everything else. And now all of that's being removed, and cash is king as it relates to all of this. And so we are seeing this ultra hot market continue just to get hotter, but we're going to continue to report on the housing market right now. So if you're a seller, you're in a good spot. If you're a buyer, be patient, because this market's really hot right now. We'll see how it plays out. But back here in Southern California or all across the United States, it's a housing boom. And obviously from the pandemic last year, and more companies are saying working from home is an option. Concentrations like bigger cities like the San Francisco market or the New York market, in those big metropolitan areas, not only is it dense in terms of people, right? People don't want to be around people because of the pandemic, but more importantly, companies can say you can work from home, and you can also have a cost adjustment in terms of the living cost adjustment, right? If you live here, it's less than San Francisco. If you live somewhere in the Midwest, it's less than New York. Or if you're going from New York to Florida, there's a lot of tax advantages as well. So you're seeing this play out. That's increasing the demand in the housing market. That's your update for today on the housing market. Let's go to the next topic. Now, as I've reported before, we're right now in the midst of earnings season for corporations. And we know this last quarter, the first 3 months of the year of 2021, corporations are not only meeting, but also beating all expectations, both on the top line, the gross, but also on the net revenue side of a lot of these corporations. Over 80+% so far that have reported are beating those estimates on both sides, the top and the bottom line. So we're going to keep paying attention to earnings reports, because that's important for future, what the companies and CEOs give in terms of guidance on a go-forward basis. We also know that markets are just kind of taking a breather right now, specifically today, but it's okay for markets to take a breather, and it's not uncommon for markets to take a breather for 6 to 9 months. Now, it doesn't mean that markets still can't go up in that period of time. You just don't want to own the index. You want to own sort of individual equities, because some of those will outperform versus the index itself. So if you go back to 1982, 83, 84, it's not uncommon from 83, 84 to have super hot economic data with a sideways market, but the market can still go up. Back then, markets were up even on the S&P 500 in those calendar years, but markets do take some time to consolidate like they're doing. So we're seeing a lot of similarities of the early 80s. Early 80s is excellent because you have a lot of policies in place that set up a 2-decade expansion from Reaganomics. Right now, we're in a similar situation. A lot of the industry information that we're reading right now is a 82, 83, 84 consolidation, which potentially could lend itself to multiple expansion and multiple years of expanding on the S&P. That remains to be seen, but it'll be exciting to see how this plays out. Also with that, it's 2009, 2010. We had the same thing play out then, but the S&P continued to grind its way higher. So it's okay for markets to pause, and it's okay for leadership to change as we're seeing that. Again, the 10-year treasuries come in a little bit, so it's under 1.6%. That's a good thing, because we don't want yields to run ahead of themselves. So as the 10-year treasury sort of moderates, because that was the first quarter of 2021 story, I think a lot of things will be all focused on earnings on a go-forward basis as policymakers, both in our central Federal Reserve policymakers as well as Congress, sort of hashes out the next infrastructure deal. So we will see on a go-forward basis, but right now a pause and a consolidation is common, it's normal, and also sort of gives ourselves an opportunity to sort of reposition portfolios on a go-forward basis. Now, here's what's interesting. In our investment committee in the last few weeks here at Blanke Schein Wealth Management, we've been noticing and seeing some changes. And there's a lot of research out there right now, that at least the independents that we're following in terms of our daily morning research. There's more and more headlines about the aerospace and defense stocks and sector. It's breaking out to the upside, meaning that sector has a positive trend going forward. Concerning, and if you're an investor in that category, that's a good category to be in. We're allocating our clients in that sector, if you will, simply because there's, I think, we believe, a positive trend breaking out as our research is indicating on a go-forward basis. Also, what does that mean on a geopolitical basis? Is this really dictating a potential, God forbid, war or uncertainty, or just a geopolitical a lot of uncertainty or risk on a go-forward basis? It remains to be seen, but the last couple of months, if you look at the aerospace and defense sectors, individual equities that are defense plays, traditionally they don't break out like this unless there's going to be sort of a concern on the horizon. So let's hope and pray this doesn't play out, but there's a lot of uncertainty in the world right now, and I think if we hope we're wrong, but the aerospace and defense sectors are telling us something, could be forecasting something on a go-forward basis. So remember, we remove ourselves from sort of the headlines. We pay attention to the empirical evidence before us, and we also make sort of asset allocation and rebalancing, basically justifications by our research. But something's happening there. We started out with today's session with a bidding war in real estate. That's fantastic. That's acceptable. But we're talking about aerospace and defense at the end of this today, and hopefully, that sector is not a preview of what's to come. We just hope that sector is just breaking out simply because it's been undervalued. And so, that being said, we will see how this plays out, and on a go-forward basis, we'll constantly be monitoring this, as well as that for everything else for our clients at Blanke Schein Wealth Management. But that's our updates for today. Thanks for watching. We'll see you again next time. Take care.